Affordable housing is the answer to, well, everything. From lower cholesterol to a reduction in high blood pressure. Yes, a recent study from George Washington University in Washington, D.C. found an association between heart health and housing. We knew that. Long before Matthew Desmond's book, Evicted, housing providers intrinsically understood the direct correlation to human stability and basic function. In fact, Wilfred Cooper Sr., founder of WNC in Irvine, California, was a pioneer in affordable housing as far back as the 60s. And like any good developer, Wilfred's feet were planted firmly on the ground. He was a master at the great balance, that is, the required symmetry of social and stakeholder value. WNC's Preservation Equity Funds, or PEF, target affordable housing, yes, but also cash flow and investor returns. Some call those unicorns. WNC calls them deals. Today we have the great pleasure of welcoming Ann Caruana, Senior Vice President, Acquisitions, Preservation Equity Fund. Ann, it is great to have you on the show.
Thanks for having me, Linda.
Time with Marcus and Millichap and BRE acquired by Essex. Now VP of Acquisitions and Preservation Equity Funds with WNC in Irvine, California. How'd you get here and what drives Ann Caruana?
Well, thanks for having me, first of all. It's been a great 18 years to get where I've been. I'd say a little bit of luck and a little bit of hard work and meeting the right people. Started off, like you mentioned, in the brokerage community, which was a great, kind of foot in the door into the real estate industry. Learned a lot coming up kind of through the ranks there and through BRE. Was with them for 9 years in the market rate space, which was really fundamental once I switched over into the affordable space and kind of helping with this new strategy and driving cash flow and operations. So I think the key has really just been to take opportunities where they come. I've had a lot of different positions within my different companies, whether it's working as an analyst or managing AC rehabs, underwriting development deals, doing research. It's been a full circle in the business, which has really positioned me well for helping grow this new venture with WNC.
That sounds wide-ranging. WNC has been in the affordable space since the 70s. What's the story behind Preservation Equity Funds Division? How does investment strategy differ from the parent company?
Yeah, well, we've been in business for 50 years now. We just celebrated that anniversary, a huge milestone, thanks to Will Cooper Sr. And we're really become experts in the affordable housing space. And that all started back in 1971 with the low-income housing tax credit syndication business. And to date, they've done about $11 billion in capitalization, helping provide tax credit equity to developers to help build low-income housing properties. So a very kind of bread and butter business unit to the company and very integral to the affordable housing supply production space. In 2004, the company formed Community Preservation Partners, also known as CPP. And their strategy was basically to take existing low-income housing tax credit properties and re-syndicate them. So infuse about $50,000 to $60,000 per unit, do major, AC rehabs on those properties, extend their useful life, and also extend the affordability regulatory restrictions on those assets as well. So a terrific strategy for helping preserve the stock. In 2017 is when they formed the Preservation Equity Fund, which is the group we're talking about today. And it's really a very complementary business unit to those two existing strategies, in that it's buying existing affordable housing, but kind of in that interim period where maybe it's not ready for an AC rehab, but the tax credits have expired and those investors want to get out of those deals. And so there's a lot of opportunities in the space to come in and acquire those assets, to manage them for cash flow and efficiencies, and then ultimately try and help position those to eventually go into that AC rehab space. So we're going to address the deferred maintenance and focus on the cash flow, but ultimately we want to give those properties, an additional 50 years on their useful life and extended use agreements to keep them in the affordable stock.
In acquiring affordable housing assets, you compete with other companies and other strategies like value add. conversion to market rate housing. How do you compete on these bids, preserve the asset's affordability, and still provide competitive return to investors?
Well, there's definitely a lot of competition in the space. I think when you're talking about going up against market rate converters, it's really a question of timing that is key to our strategy. And I think once you get within 10 years of those regulatory restrictions expiring, you start to see a lot of those buyer types come into the market, even sometimes 15 years. So really, trying to acquire those assets before they get to that kind of at-risk state, and coming in before you're going to get people pricing in that back end, that's going to be a lot more than what you're budgeting. But if you can get in on the timing right and then hold those assets for another 5-10 years, then you can position them for the resyndication, because they will become priorities for the tax credit allocations. So it's really about the timing on these deals.
Federal programs are central to most affordable housing. Which programs does PEF use, and how important are they?
Well, we buy existing deals that have a number of these different programs on them, whether they're project-based Section 8 or the low-income housing tax credit, Section 42 programs, housing choice vouchers, bond deals, there's RD deals. I mean, we don't really look at RDs, but there's a ton of programs that are out there, and even, there's a ton of local programs as well. So we look at a lot. If it's falling within an 80% kind of AMI restriction, we're interested in it and within our geographies. And there's ways to make all of these different programs work for our strategy. It's a wide array, and they're all really important to addressing the affordable housing crisis.
The Biden administration wants to expand Section 8 bigly. Is this the best path to more affordable?
Well, the Section 8 voucher program, I think, is fantastic. The low-income housing tax credit program is also fantastic, and I hope that they expand both, but for different reasons. So the LIHTC program is really adding more stock to the equation. LIHTC program adds about 75,000 units per year, which is the largest, public-private partnership in the country that's adding that much stock. So it's really crucial to addressing the core issue at hand. But the Housing Choice Voucher Program offers a different need for tenants, which I think is as crucially important. It allows people choice in where they live. And a tenant-based voucher, a tenant can take that and go live near the school district that they want, near the job centers that they need to be near. It gives them options. And I think anytime that you give people choice, that is going to help with their quality of life and ultimately their healthy outcomes.
Multifamily housing is the belle of the CRE ball as of late. As such, there is more competition for deals. Has this impacted investors' expectations on returns?
I don't think the returns are so much impacted as it is, having to find more creative ways to do deals, having to find more creative ways to add value. The multifamily space has certainly come out relatively unscathed in the last, recession. So there's that flight to quality that you're seeing. There's the super low interest rate environment. So yeah, there's a ton of capital in the space right now, and there's more coming into the affordable space. But ultimately, I think that is a good thing for our space. I think getting more institutional capital is going to be a positive in helping solve the crisis.
We can't get out of this without talking about ESG investing. That's environmental, social governance. It's getting a lot of attention. How does ESG impact how you do business?
Well, ESG is a core fundamental issue and strategy to PEF and to WNC. So on the fund level, we're hyper focused on the environmental side of things, and that every acquisition we do, we hire an energy consultant to come in and examine all of the systems to tell us where we can upgrade systems to more efficient use, and also if there are local utility companies that will help provide incentives and or subsidies for the cost of those upgrades. So for example, we're doing solar projects on 4 properties right now. And the cost of those systems is about $3.2 million. We're coming out of pocket about $70,000 for that $3.2 million in cost. We're going to get 100% of our electricity saved over those 4 properties, and probably 90-ish% of the cost of the electric bills to both the tenants and the common areas. So these types of upgrades are just a triple bottom line win. The tenants save money, we save money, which obviously goes back to the investors, and then we're obviously reducing our energy consumption. So we've seen this play out time and again with our properties and have been widely successful on that front. The social aspect is kind of obvious. We're providing affordable housing to people, so that affordable rent is by and large their greatest amenity. But we go above and beyond that in many properties, offering after-school programs for some of our family deals. We offer social activities. We often partner with nonprofits and food banks to help deliver groceries, no charge to the residents each month, sometimes weekly. And we also partnered with nonprofits during the pandemic before there was CARES Act money coming out to help people impacted pay their rent. So we're certainly focused on that aspect as well. And then, if you go to the last letter, the G for governance, I'd say that's mostly, from the WNC level. This company has 50% of the director level and above positions held by women or minorities, which I think is quite remarkable in today's standard, and really just shows how ahead of the curve WNC has been in its hiring practices and in its culture.
Well, great show, Ann. This has been fascinating. Thank you for helping us understand some real value paths forward in the affordable space.
Thanks, Linda.
The undersupply of affordable housing, especially in the nation's economic engines of California and New York, has been desperate, even painful. Pre-pandemic, there were over 250,000 homeless between the 2 states. A lot of money has been thrown at this issue, and still the problem grows. Maybe this is the moment. Congress is discussing provisions that promise to create 1.5 million affordable homes across the nation over the next 10 years. A key part of this is lowering the housing bond limit from 50 to 25%, effectively reducing private activity bonds to 4%. As with most things federal, there are far more questions than answers. Answers you can count on YieldPro to deliver in the days ahead. Thank you for joining us. I hope you enjoyed our show. Look for our next exciting episode of NAHB Power Hitters.